Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, July 30th, 2014. In this video, I wanted to take a look at both gold prices as well as the gold mining sector, including about a dozen or so of the components of the GDX, some names that I'm watching. We'll look at those charts. We're going to start out here with the chart of gold. This chart is a spot gold price. It's an end-of-day chart, meaning it's updated every day at the end of day. So we're not looking at a streaming chart. We're also looking at a weekly chart. Now, this is the same chart I've had a live link available to going back to late last year. In fact, these are the original notes on October 14th when prices were up here. My preferred scenario was to see gold come down. I had the Fibonacci retracement levels here from the move off this low to the highs, the peak of the last bull market in gold, and I'll talk on that in a second. This was the cyclical bear market we just went through. We came down from that point and hit both the uptrend line, which I was targeting. This is going on about 13-year-old uptrend line that defines a secular bull market in gold. And that secular bull market continues, at least by my book. This is a very well-defined trend line, a lot of touches, and more importantly, a lot of recent reactions off that trend line, which help validate it. So really what we're looking at over the past 12, 13 years or so is a secular bull market in gold, which continues today. And we've had a few cyclical bear markets, corrections of 20% or more, including the most recent, well-known bear market in gold that came off the 2011 highs. But again, bigger picture, a secular bull market, which in my opinion continues. And my belief at this point remains that the cyclical bear market off the 2011 lows is most likely over and most likely ended. We had a double bottom here. That second tag back in late December put in a double bottom so far in gold. Now, I want to say before we move on to the gold mining sector, I've fielded a lot of comments on the site by email through the contact form lately. A lot of people asking, when are you going to add back exposure to gold? What are you thinking about the miners? And to be honest with you, I have my concerns. They've been consolidating, and I was fortunate enough and was very vocal about this on the site. I stepped aside a few months ago and have pretty much sidestepped this whole consolidation range. As a trader, my goal is to catch the moves in the markets, the sharp moves up or down, and try to sidestep the noise. Consolidation only serves to you're grinding your wheels, you're going nowhere. More than likely, anybody that remained, shorter term swing traders that remained in the market in the last couple months, I'd be surprised if your stops didn't get cleared with all the volatility that we've had within that range. So with that being said, I am still watching closely, continue to lean towards the bullish resolution of this consolidation range. But this is the key. I'm spending a lot of time here, a lot of focus, and I cannot emphasize it enough. This is what is going to determine where these miners go. I can make a very bullish case, and that's what I'm going to do here in a minute, which I've done in the past, a very bullish case on the miners, especially from a longer term point of view. We're going to look a lot at the weekly charts, but it all comes down to this, folks. If gold does go on to break below this long-term uptrend line, and especially by quite a bit, the next support level would be those double bottoms back from, I think it was June of last year, and the late December lows in gold. We could go on to make a triple bottom. As I mentioned before, it wouldn't surprise me if we go down towards that level. I really wouldn't be surprised to see a break below to just one final fake out move. But if and when those levels go, that is a key support level. That's also the 61.8 Fibonacci retracement level. So, you can pull that on a daily chart, go back a couple years. And that's what I'm watching. So first, and foremost. And the reason for my concern right now is gold is in very close proximity. We had a nice bounce off this trend line. I know when you're viewing this on YouTube, watching this video, this chart looks minuscule. So go ahead and pull this chart up. The links are available on both the home page and on the live chart links page. Again, this is the weekly chart of spot gold. So we've had a nice bounce, which really translated into a much stronger bounce in the miners, and that's the group of stocks that I play more so than gold prices. But we are precariously close to that trend line right now, and at this point, with both gold and the gold mining stocks still consolidating, chopping around, it's too early to say with the utmost confidence that this support level will hold, although that is, at this time, continues to be my primary scenario, that the support will hold. And in fact, I think the miners are looking interested, and although I haven't yet started moving back into my trading account into those positions that I booked profits on a couple months ago, I'm considering it, and I'll let you know when I think that time is there, and it may be there today. We're down pretty nicely on GDX right now, so at any point I may start nibbling on those names. But let's keep an eye on this. Again, watch gold, because where gold goes, the miners go. Now let's go ahead, enough spent on that. Let's go ahead and jump into the charts of some of the miners. I'll go through these in no particular order. What I'll start out on each stock, if you look up in the upper left-hand corner, if I don't mention the time frame, it's right here, weekly chart. This is a symbol AU we're looking at here. And what we're going to see, again, I'm going through, I think it's about 15 names in the sector that really stand out to me from a longer-term perspective. A lot of these gold mining stocks are long-term trade ideas. I continue to own these. My long-term accounts, personally, I still own a lot of names in GDX. It's just I'm flat in my trading account at this point, and looking to hopefully reposition soon, if and when I have the confidence to do so. All right, so this is AU. This is a common theme. What we're looking at here, a lot of these stocks, these mining stocks, came down and either tested or slightly broke below multi-year support levels. Now, a break below in itself is bearish, but when you regain that, as most, if not all, of these stocks have, when you regain those support levels, that is a very bullish event. It's a false breakdown, i.e. a bear trap. Sucked in a lot of bears. It capitulated a lot of the last of the weak-handed longs. Volume is confirming. When you see a huge drop in a stock or a index or security like this, and you see this large volume spike, that represents capitulation, and it's usually a selling climax. So volume patterns. As most of you know, I put a lot of stock into divergences, momentum price oscillators. This is the PPO, the RSI, which I like to use these on the weekly chart. We had strong positive divergences into the lows. Prices making lower lows against the indicators making higher lows. Positive divergence. And also, in many of the cases, we had these bullish chart patterns, such as this falling wedge. So we had a nice breakout, very impulsive move up, and we ran into this gap. I've probably had this line on this chart for a while. There's a huge gap there. You can probably see as I zoom in, which naturally the bottom of that gap acted as resistance on the initial thrust up. Just as well, you can see the RSI went from being deeply oversold to overbought in relatively short order. So I've talked about this often, when you're in a position and you have an extremely overbought run up into resistance, there's really no better time to book profits, take a short scalp, because even if AU were to have broken into that gap or even slightly exceeded it, the odds are it would have probably, that breakout wouldn't have lasted very long until you get this type of consolidation, a pullback to help work off these overbought conditions, which has been the case here. So at this point, the next true long-term buy signal on AU would come on a break of that level. which is roughly, we're looking at a weekly chart here, so these aren't exact numbers, but call it 1982. Just look at the reaction highs here and the bottom of that gap back there, and if and when AU makes a solid break above that, you're looking at a weekly chart, so you want to trade, you want a weekly close to confirm it, not an intra-week breakout, but you do want to see prices close well into or above. Ideally, you want to see the top of that gap taken out, somewhere around 2040. I could put the crosshairs on it if I can do that and tell you the high, the low, 2039. Yeah, so once the 2040 level is solidly taken out, that is a very bullish technical event. These recent reaction highs will be taken out, that gap resistance, and AU may very well go on to continue. However, I can all but assure you, if gold, the spot gold prices we just looked at, were to go on in the upcoming weeks to months here and break down below that uptrend line, especially go on to break down below the what at the time might be a triple bottom, the previous double bottom lows from last year and earlier this year, chances are AU is not going to break out or make a sustained breakout of this level, but will go down with most of the other miners because they are in effect just a leverage play on gold. We go to the daily charts. AU, this would be the next buy signal. You have a couple reactions here. It's defined by this horizontal line, 1, 2, 3 tags. So if you replicate this on your chart, I'll try to update some of these charts. I'll add live chart links too if I don't have already. But that would be the next breakout above this line, and then of course you have this previous reaction high that needs to be taken out, and that's what I was just pointing to on the weekly chart, and there's the gap that we were talking about over there. So a little work to be done in AU, and on the bearish case, again, they're going to follow gold ultimately. You could draw multiple trend lines. You could draw one there, you could draw a little steeper, but I can tell you these daily charts can be a little tough to game. There's a lot of volatility and a lot of trend line breaks and whipsaws. So, ultimately, let's just take this trend line away for a minute. We have this lowest trend line here. That is, let's see, about 1560. That looks like a pretty decent cluster of support there. I wouldn't want to see that 1560 level go. I'd be pretty concerned on AU if and when that level went. So that's AU. Let's move on, and we'll go a little quicker on the rest of these just so I can get through this video in a decent amount of time. Newmont, another big name in the sector. Same story, nice volume on the recent lows. That one did a really nice job of catching support, from the previous reaction lows. Again, we're looking. I've jumped back to a weekly time frame here, so this is late 2008. 1, 2, 3 candlestick tags of that level came down, made a brief intra-week. If you really zoom in, you'll see. You look at this little hanging man candlestick here, and you can see just the wick right below that support level, but we hammered to close back up there on the weekly time frame. Beautiful, beautiful technical price action. All in all, about as bullish as a chart could look, potentially bullish, because again, no matter how bullish these stocks look, it's all gonna boil down to what gold does. We have to keep a close eye on spot gold prices. And we're also, we formed some nice bases here, and we just need to break out of these bases. So again, my primary scenario right now is that gold will hold support, will reverse in the upcoming months here, and if and when that happens, you're going to see some great longer-term buy signals on the minor stocks like Newmont taking out this level here, which is roughly 2650. Again, we're looking at the weekly charts, so you want to zoom to time your entries and exits. You want to really take a look at the daily and 60-minute charts to hone in on your entry points. But longer term traders should definitely keep these in mind. So there's Newmont. We see the white lines denote a bullish falling wedge with positive divergences in place at the lows. We had a breakout, come back to back test the wedge, and so far we've been tapping on this horizontal support level, all the while putting in a nice base from which to launch a more sustained longer term rally and or bull market in the gold mining sector. Okay, let's take a quick look at the daily chart. This is the same horizontal support level I just talked about. Again, you can see here very clearly, this blue line acted as support back at this point, support, a little brief break below. Finally, prices did make a sustained break below, and once broken, support becomes resistance. As you can see, 1, 2, 3 failed attempts. Knock, knock, knock. We're tapping on that level. So this, for those of you, interested in Newmont, replicate this line, call it the 2640-ish level. Solid break above there would be a buy signal on Newmont, assuming that gold prices confirm. And the sector as well. Keep an eye on GDX. Trade them all together. All right, next in line we have HL, and same story. This is a descending triangle pattern, similar to very similar to a bullish falling wedge. Divergences in place, etc., etc. As I said, many of these charts look the same. HL, remained well above the 2008-2009 lows, and recently had a breakout. Let's zoom in a little bit. Perfect. We have a nice, well-defined downtrend line here, breakout, and a back test, and so far prices have held. We've made a successful back test, so all in all looking good from a longer term perspective. We zoom into the daily chart. I won't spend much time because this is a little sloppy. I don't see a whole lot here. I could draw a few trend lines, but nothing that stands out. So you really want to just keep an eye on these previous reaction highs, because those will act as resistance. And like any other basing pattern, HL has been basing all the way back to, mid to early last year. If and when these lows are taken out, we had the July lows, late June lows, the late December lows. Just like gold, we have a double bottom here. If and when those levels are taken out, that will be a bearish technical event. So let's just I'm not trying to force these trades. Right now we're in a consolidation range, so we need to wait for an upside resolution on a lot of these stocks, at least for longer term or near term buy signals as well. KGC, nice bullish falling wedge pattern, positive divergences in place. Let's see, went well below. The lows back here on this one go all the way back to May 2005. Took those out. Either way, a strong looking, very clean bullish falling wedge pattern, but that one has yet to break out. So here's one with a lot of upside potential. Longer term traders will want to watch this wedge. Here's the downtrend line on the daily chart. This goes back. We're looking at a 2-year daily chart here. So this trend line goes all the way back to about October 2012. And this, if you want to get a jump on an entry on KGC, you'd wait for a break of this trend line. Replicate that on your chart and set a price alert for that trend line break. IAG, same story, bullish falling wedge pattern, positive divergences, huge volume surge indicating a selling climax. Prices broke out, impulsive breakout, came to hit this support line, have pulled back down. Healthy, normal behavior. How far this pullback goes, it's hard to say. Let's take a look at the daily chart, see if I see anything here. Yeah, we definitely have these two lines here, very close proximity. There's a resistance zone. Back here, these lines acted as support. We had a reaction here, reaction here, reaction here, and then finally a break of that support. And now tap, 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 4 taps on that resistance zone now. So, solid break above that level, call it 440 or so, the top of the zone, will likely be a buy signal for IAG. Okay, this is a weekly chart of HMY, Harmony Gold. They're not all bullish falling wedge patterns. Some of these, I have a couple of these miners that are setting up some nice potential inverse head and shoulders patterns. Inverse head and shoulders patterns are bottoming patterns. They're just a head and shoulders topping pattern turned upside down. So you have a left shoulder, head, right shoulder. Sometimes you have a horizontal neckline. In this case, you have a downsloping neckline, which is perfectly normal. I talked on this in the last video. If and when that pattern breaks out about where I expect it to, based on the symmetry of the pattern, The measurement projects right up into this very solid former support, now resistance zone. I say very solid because we have, these reactions back here in 2005, 2008. We held there for a little while in early 2013, and then boom, look at that massive gap below. It's just beautiful technical analysis right there. Once that support broke, it broke with a bang, and prices just fell off a cliff. But either way, so far looking good. But if and until we get that breakout of the neckline, that is just a potential head and shoulders pattern, inverse head and shoulders pattern, because we have to have the trigger or the buy signal, and that will only come on a move above that neckline. Daily chart, don't see a whole lot here. We had this downtrend line, prices broke out, ran in, hit this resistance level, which was this previous reaction high, as well as a gap back here and some other reactions. We can draw these uptrend lines. There is one that prices are currently above now, so that may be a bearish event if we break above this shorter term uptrend line that I have. So right now, again, do I have a very strong opinion on HMY in the near term? No. Longer term, I do think there's a lot of bullish potential in this pattern, because that would send the stock all the way up from the low to mid $3 range all the way up to almost $6 a share. So, a good 80% plus return on that one if that pattern plays out. SSRI, Silver Standard Resources, nice downtrend line was taken out here. We had an impulsive move up, a very sharp pullback and back test of that trend line, and then boom, another move higher. So this one, I've had some excellent trades on this in the last year or so. This is a daily chart. These were previous targets and trades on it. Most recently, I believe this one was traded. The chart was on my stock charts list with the price targets there, so you'd have to pull that one from the site, look at the live chart links, or just pull the symbol SSRI and reference the more recent trades. But again, I don't have a very strong opinion near term. As I mentioned a few weeks ago, getting quite extended, overbought on the daily time frame. There were divergences in place on just about all of the mining stocks, and hence, they've been trading really in a consolidation range and have pulled back somewhat for going on a couple months now. SLW, not a very strong opinion. It's held, this is a support level here that it's held for quite some time. We've had 1, 2, 3 tags at that level, so far so good. We have resistance really around this reaction high. We have to take that out, and again, that's a weekly chart. We look at a daily chart, and we do see a breakout above this downtrend line here. We had 1, 2, 3, 4 touches, and finally a breakout. And the next true buy signal on this, at least on the daily time frame, would be over this horizontal line here, which comes in around 27, 20-ish, somewhere around there. We have several reactions plus a big old gap back there. So like everything else, this one is just working off the overbought conditions and consolidating, and we'll just have to wait for some, buy signals on these. Okay, I'm a little bit better than halfway through the names that I wanted to cover, so I'll go a little faster here, try to get this thing wrapped up. Here's GG on a weekly time frame. Another very nice looking inverse head and shoulders pattern. I've drawn here. We have a neckline here and really an alternate neckline there. There's a few of these candlestick wicks that I put a parallel neckline, so to be safe on that one, again, I take breakouts in context with everything else, meaning the gold stock sector. We look at GDX, the price of gold. So if GG took out the first neckline and the sector was looking very bullish at the time, I might, add some exposure for a long-term trade here, because this, again, is a weekly chart. This head and shoulders pattern took, well over a year, close to 2 years to form, so it's going to take a while to play out. These are long-term trades, long-term trade ideas when I'm looking at the weekly chart. Daily chart, zooming in, there's some resistance right here at 29.30, previous reaction high, plus a gap back here. and a couple reactions actually. So if we take out the 2930 area, that would be bullish and probably project up into the somewhere around the 3180 area. But again, GD's probably not going to get there unless GDX moves up as well. So I wouldn't jump the gun on this one. It is pretty close to that level, whereas we still don't have any clear buy signals, at least near-term buy signals on gold stocks yet. EGO, nice wedge, falling wedge pattern, nice breakout, little consolidation, possible bull flag pattern there on the weekly time frame. You know, the usual volume capitulation, positive bullish divergences there. Not a lot to really talk about on the daily chart. PAAS, silver stock, weekly chart here. Nice downtrend line, breakout. It's not drawn here. We probably had some slight divergence, about flat line divergence on the MACD and RSI against prices falling. I haven't drawn it out here, but that would be sort of a wedge type pattern. Either way, the more important thing is the breakout of this downtrend line. First move up, worked off those overbought conditions, went on to make a higher high. That's bullish. So when you look at this from a weekly perspective, we are in a confirmed uptrend. By definition, an uptrend is a series of higher highs and higher lows. So far we have this low, a higher low, given not much of a sampling data. There's two lows so far, but we have this high and another high. So two new highs, two new lows, and ideally any pullback will remain above this level here, that recent reaction low, to keep the uptrend intact, and then we go on to make a new high. So still looking bullish from a weekly perspective. This one had this falling wedge breakout here, very sharp move to hit this previous reaction high. In fact, this is an intraday fake out. This is what I talk about often when chasing breakouts on a very extended moves. Sometimes they go on and continue higher, especially in these gold stocks. But as you can see here, this stock became very overbought on the daily time frame at this point. Went on and made this intraday breakout, which undoubtedly there were some gold or silver bulls sucked in on that move, looking at this previous reaction high, seeing prices take that out as bullish, and you can see by the big red candlestick, prices failed to close above that level and have pulled back since. So again, my style, I won't chase a breakout if the stock is extremely overbought, even if it may continue. It's just not worth it. The risk reward is just not there. AEM, let's take a look at the weekly chart. Caught support here, this green support line. This one I believe I posted this last year, and we made a trade-off support if I'm not mistaken. So, a nice looking chart so far. Prices have held multi-year support and have moved quite a bit higher. There was, this resistance range, quite a few resistance lines here. We did have reactions off those, worked off the overbought conditions, and have powered higher. So, all in all, looking pretty good. PPOs in bullish territory above the zero line. Like everything else, very extended. You look at these overbought readings on the RSI, and if you just go back to when they were overbought, follow the horizontal line up. The vertical line up. These are the overbought readings. Typically, what you see here is you don't want to be chasing these stocks when they're overbought. Now, something else I talked on, we were in a bull market for a while, at least since 2011 in gold. So, a bear market since mid 2011 in gold and the gold mining stocks. So overbought becomes much more of a sell signal in a bear market than it does in a bull market. So if my initial thoughts are right, and we are in the early stages of a new bull market in gold and the gold mining stocks, then you would expect overbought to become a lot more overbought, and you'd expect the reactions to be much smaller, much more muted on these overbought readings. So just food for thought. Here's a good example back here. Gold was in a roaring bull market, and we became overbought at this point here, and all we had is a little bit of consolidation, and the top really didn't come till quite a bit higher. So just another point to consider. AEM from a daily perspective, quite stretched, very overbought on the daily time frame. The RSI turning down. we have that divergence. I could draw a line there, that divergent top running in smack into this resistance line that I had defined by these reactions. And I'm sure if we go back in time, we'll see some more there. Yep, quite a bit. So that's an overbought stock at resistance and not one of my favorite at this point in time. AUQ, not a lot there on the daily chart. Weekly chart, here's a nice downtrend line that's yet to be taken out. Positive divergences in place. So that would be a buy signal if and when this downtrend line on the weekly time frame is taken out. And there's a very nice, very well-defined resistance level here at this horizontal line, which comes in roughly 520-ish, somewhere around there. You just have to take a look at this reaction low here, and these reaction highs. And that would be a magnet, in my opinion, if and when prices broke out, assuming the gold sector and gold prices were confirming. So if you get a breakout here somewhere in the 450 area, there's a very good chance that that stock's going to shoot up to 525 or so. And a 75-cent move on a $4.50 stock is a very decent return. Gold. This is Rand Gold, with the symbol GOLD. Positive divergence at the lows. Prices have moved up. Other than that, I don't see a lot that stands out on the weekly chart. Daily chart, here's a gap. I've had this gap on my chart for a long time, this gap resistance level, and prices have run smack into there, overbought. So they're going to have to ideally pull back, at the very least work off a little more, work off these overbought conditions to build up the strength to finally take out that gap. If and when they do make a sustained move above the top of that gap around 89.30-ish, that would be the next buy signal. But as I said, quite extended and definitely not one of my favorites at this time, even if the miners start shaping up here in the near future. I think there's a lot more potential on some of those other names that I've covered. GFI weekly chart, very steep bullish falling wedge, positive divergences in place, some capitulation selling down there. And if you look, if we zoom in, I have this horizontal line. This is the first resistance level that we have to clear, this horizontal line here. Then we have a little bit more resistance over there, but a lot of potential, nice looking base. So you'll want to see GFI. We'll look at that line here on the daily chart. That's about 438. So you can see that level acted as support back here. Prices gap below that support level at this point, made a sharp move down and have come back 1-2 tests so far. So my guess is the next time that we make a solid break above the 440-ish level, that'll probably launch prices somewhere up here. This was a former price target from trades last year. And that's pretty much all I wanted to cover. Let's take a quick look at GDX. It's a little bit of a sloppy chart. Let's look at a 60-minute chart. Here's what GDX is doing. We have this trend line. I've shown various uptrend lines because you can draw them different ways, but this one looks pretty valid. It starts off the lows back in late May, early June. We had a reaction here, and today it looks like prices are just starting to crack through that level. Actually, I could adjust this upwards a little bit to really catch that. So not a great sign right now. This blue line, I just wanted to point out, when I became bearish, not bearish, but started vocally booking all my profits on the gold and silver mining stocks in the trading account. That was right, I believe, on June 22nd, or June 23rd, June 24th, where this blue line was. So, one thing as a trader, I want to catch the rips and the dips. I was clear that I had no interest in shorting the miners, which I often do. After a big rip, I'll try to turn around and catch a counter trend pullback trade. But with my primary belief being that there's a good chance we're in a new bull market, I expect pullbacks to be very shallow and bought up quickly. But at the very least, the miners were so far ahead of themselves, so overextended, so overbought, that I figured we'd need, some time to consolidate, which is what we've done. And, although I'm far from a perfect trader, over time, one thing I've learned to do is step aside when I think there's going to be a lot of sideways action or sloppy trading ahead. And, it does a great job of taking away that mental angst. I couldn't imagine being long the miners in my trading account in the last few months, waiting for the next breakout of this pattern. Because if you look at these rips and dips, not only would you had stops taken out, you're just tying up capital. And so this is a natural, healthy consolidation period, but we do have to watch it. I cannot say with absolute certainty that these support levels are going to hold. Right now, this trend line is broken. We have quite a bit. If you look at the volume at price histogram, these bars up here, the green and red bars, this is where the consolidation is taking place. And below these, really this S1 line, there's virtually no trades because there was a big gap back there. So this is where gold stocks exploded. They went up to this range, and now this is our big fat consolidation area here. The healthiest or the most bullish outlook would be that we don't give back any more in price and prices remain above the top of this level around this S1 line and ultimately go on to break out of that range. To me, that would be very bullish, very little give back. The only thing gold stocks are giving back is a little bit of time here while they work off those overbought conditions. So I'll keep you posted, but as of now, I'm still holding off. Unsure if it's still a little too early to enter these stocks or not, and that may change any day now. In fact, there is a possibility I may start to average into some of these stocks, average back into some of these positions, or maybe add some more exposure in the long-term accounts, keeping stops below this level on GDX, but also looking at the charts of the individual names I trade. So hopefully that makes sense. This has been Randy Finney with the Right Side of the Chart. Hope you enjoyed it. Have a great day.